Welcome back to The Deep Dive. We're the show that cuts through the jargon of earnings calls to give you, well, the critical insights.
And hopefully some actionable knowledge, too.
Exactly. Today, we are diving into Uniper's first half results for 2025. Big energy player. Lots going on.
Yeah, definitely. A landscape that's constantly shifting for them.
Our mission today, let's unpack how Uniper is navigating this, how they're kind of redefining themselves. We'll hit the numbers, the strategy, and importantly, what it means for you as an investor.
Sounds good. Let's get into it.
Okay, let's start with that snapshot. The H1 2025 financials, what did we see?
Well, Q2 GAAP EPS came in at 0.42.
And the revenue?
Q2 revenue was $27.15 billion. That's actually up 6.4% year over year.
Which, like you said, in this volatile energy market, that's notable.
It is, and maybe more crucial was the adjusted EBITDA for Q2, $518 million. Pretty strong.
Right, because Q1 was a bit modest, wasn't it?
It was. So that strong Q2 really pulled up the first half. H1 adjusted EBITDA landed at $379 million.
Okay, $379 million. Now, context here is important. That's quite a bit lower than H1 2024.
Oh, absolutely. H1 2024 was exceptional, $1.743 billion, but, and this is the key point, this year's number is bang in line with what management guided for.
They called it a normalization year.
Exactly. 2024, those were, unique market conditions. So this is more of a return to, let's say, expected levels.
And adjusted net income for the first half?
Came in at $135 million. And importantly, their financial position looks solid. They ended H1 with $3.256 billion in economic net cash.
That cash position, that liquidity, that's a real strength, isn't it? Especially now.
Huge strength. Gives them flexibility.
So even with earnings normalizing, management felt confident enough to reaffirm, even narrow, the full-year guidance for 2025.
They did. Adjusted EBITDA now projected between 1.0 and euro 1.3 billion.
And adjusted net income?
Between 350 and 550 million. So still a decent range, but tightened up.
What I found interesting, though, was the market reaction. Or lack thereof.
Yeah, the stock basically closed flat on the announcement day.
Which suggests to me maybe this normalization story is, fully baked in already. But perhaps the market isn't quite seeing the strategic shifts underneath. What do you think?
I think that's spot on. The market seems to see the drop from the crisis highs as just, gravity taking hold, a return to baseline.
Right.
But what might be getting missed is, like you said, the balance sheet strength. And this pivot they're making towards more predictable contracted earnings, it's less about riding the commodity wave.
And more about building something resilient.
Exactly. More stable, long-term. And that strategic pivot, that's really what we need to dig into now.
Okay, let's do that. Unpack this pivot. It's not just numbers. It's a deliberate reprioritization. After those high margin years, what does this shift actually look like on the ground?
Well, it's hitting several areas, but the big flag is the CapEx plan, capital expenditure.
How much are we talking?
Around $8 billion committed to their transformation running out to the early 2030s.
Uh-huh.
And about $5 billion of that is specifically targeted by 2030. So a significant chunk is front-loaded.
And where's that money going?
Overwhelmingly towards what they're calling green and flexible generation.
Green and flexible, okay.
Yeah, the strategy is pretty clear. Prioritize investments that generate stable cash flows. Think regulated assets, long-term contracts.
So the aim is predictable earnings.
Predictable earnings, and crucially for an energy player like Uniper, reducing their exposure to those volatile merchant market prices.
Moving away from the pure commodity gamble, more towards utility-like stability.
That's a good way to put it, yes.
So alongside investing in new things, they must be tuning up the internal engine too, right? You need efficiency, agility to pull this off.
Absolutely. You can't transform externally without internal changes. So yes, cost discipline is a major focus, operational efficiency.
Does that mean job cuts?
They've flagged a plan to reduce about 400 roles by 2026, but they're aiming to do it mainly through attrition, voluntary measures, so a more managed approach.
Okay. And it's not just cuts.
No, far from it. They're actually making a pretty significant push into artificial intelligence, AI.
Really? How so?
They've got a strategic partnership with Microsoft. They're using AI to optimize operations, trading activities, even setting up their own AI lab.
So not just a buzzword. Real application.
Seems like it. Think about using AI for better demand forecasting or optimizing gas storage, things like that. In complex energy markets, that kind of edge, well, it matters.
That definitely adds an interesting layer. Okay, internal optimization, external investment. But let's get to the core, maybe. The gas and LNG portfolio. That's huge for Uniper, especially given recent history.
It is absolutely critical. Remember, they terminated those huge contracts with Gazprom Export back in 2023. That was a massive event for them.
A forced pivot in many ways.
You could say that. So now they're actively reshaping that whole gas midstream business. The goal is to really cement themselves as a top gas supplier in Germany and surrounding regions.
What kind of volumes are they targeting?
They're aiming for 180 to 200 terawatt hours per year in sales just to the DACH region. Germany, Austria, Switzerland.
That sounds like a lot.
It is. A terawatt hour is a massive unit. And beyond Europe, they're also strategically growing their LNG sales into Asia.
Why Asia?
Diversification, really.
Okay.
Spreading price and volume risk across different global markets. It's smart risk management.
Makes sense. But to sell that much gas, you need reliable supply.
Yeah.
Are they locked in new deals?
They've been busy on that front. Secured some key long-term contracts. There's a big one with Tourmaline for gas supply, about 68 TWh per year starting 2028.
Okay.
And an LNG purchase and sale agreement with Woodside up to 28 TWh per year. These are significant volumes underpinning that strategy.
Yeah,
They extended their partnership with ConocoPhillips, which is a long-standing relationship. Plus, a new deal with Octopus Energy to supply power and gas in Germany, Italy, and Spain. So expanding downstream, too.
So what does this refocused gas business mean for the bottom line, say midterm?
They're projecting a normalized, sustainable earnings contribution from this gas and LNG segment of around 250 to 300 million a year.
That provides a solid, predictable base then.
That's the idea, a reliable earnings engine.
Okay, that covers the gas side. But the world is moving, albeit unevenly, towards decarbonization. What's Uniper's play there? How do they get greener?
They've set a pretty ambitious target, total generation capacity of 15 to 20 gigawatts by 2030.
And the green part?
More than half of that, over 50%, is intended to come from renewable, low carbon, or what they term decarbonizable assets.
Decarbonizable. What does that mean in practice?
Yeah.
Like for their new gas plants?
Right. So new gas-fired plants will start on natural gas, obviously, but they're being designed as hydrogen-ready or CCS-capable.
Okay, hydrogen-ready, I get. Convert them later. What about CCS-capable?
Means they're designed so carbon capture and storage technology can be bolted on later, capturing the CO2 before it hits the atmosphere.
Are they actually doing any CCS projects yet?
They're actively pursuing their first big one in the UK at a site called Connah's Quay. If it gets the green light, it could be running around 2030.
So it's still a bet on future tech and economics.
It is. They admit the best path isn't totally clear yet. CCS has high upfront capital costs, while hydrogen, the future cost of green hydrogen is still a big unknown. It's a major strategic gamble, really.
Ambitious targets, big bets on future tech, but are they hitting these goals smoothly? We know regulations, especially in Europe, can throw spanners in the works.
And that's exactly what's happening. Not entirely smooth sailing, no. Regulatory delays are a real issue.
Particularly where?
Germany, with the auctions for new gas plants needed for energy security. Those delays are pushing potential projects and the revenues further out.
When are those auctions supposed to happen?
The German government is aiming for late 2025 for the first tenders, but it needs fast legislation and, crucially, agreement from the EU on state aid rules. That's not guaranteed to be quick.
And the UK. Similar issues.
Similar story. Decisions on support mechanisms for new gas plants there aren't expected until 2026.
So Uniper's ready to go, but waiting for the starting gun.
Pretty much. They say they have the sites, the teams, the plans, but they need clear auction rules, predictable returns. You can't commit billions without that clarity.
Makes sense. Okay, so that's new builds. What about the existing portfolio? Are they selling off older assets or optimizing what they have? That's also part of transformation.
Absolutely fundamental.
Yeah.
And they've made real progress on divestments. A lot of this was driven by the EU state aid rules from their bailout.
What have they sold?
Their stake in Latvia's Gaza in Latvia. They've agreed to sell their big district heating business in Germany, Uniper Vorme.
Okay.
The process for selling the Datteln 4 coal plant is still ongoing, and they already completed the sale of a major gas plant in Hungary, a CCGT.
So streamlining the portfolio, are they investing in existing flexible assets too?
Yes, good point. They're investing in pumped hydro storage, like the Happburg project in Bavaria. They see storage becoming much more valuable as more intermittent renewables like wind and solar come online.
Right, balancing the grid.
Exactly. But interestingly, their target for pure new renewable capacity wind and solar farms has actually been trimmed back a bit to 2 GWP by 2030.
Why is that? Market too tough.
Seems so. They're citing a more challenging market, more competition, so they're focusing on projects they see as sustainably profitable, not just chasing gigawatt targets. Pragmatism again.
Okay, so pulling all these threads together, what's the main takeaway for an experienced investor looking at Uniper after this call?
I'd say Uniper is deep in a phase of pragmatic recalibration. That's the key word, pragmatic.
How so?
Well, narrowing the guidance, shifting that capital spend towards flexible gas and targeted green assets. It all signals a really realistic view of the market today and those regulatory timelines we talked about.
They're not overpromising.
Exactly. They're making calculated, long-term plays, not chasing every shiny object.
And this focus on predictable earnings, less merchant risk. That must resonate now, right?
Yes.
Especially with lower clean spark spreads squeezing gas plant margins.
Absolutely critical. That clean spark spread, basically the profit margin for gas power being lower, makes volatile merchant income much less attractive. Predictability is king.
And the credit rating agencies seem to agree.
They do. Recent upgrades from S&P and Scope specifically pointed to the improved financial risk profile. Plus, they extended their big $3 billion revolving credit facility out to 2028. Strong liquidity backing it all up.
So FY25 really is that normalization year, setting the stage for a bigger portfolio shift closer to 2030. For investors watching now, what are the key things to look out for, the catalysts over the next, say, 6 to 12 months?
Okay, number one, clarity on those German gas plant auctions. That's huge.
Right.
Number two, progress on the UK carbon capture project. Is it moving forward?
Okay.
3, signing more long-term gas and LNG deals to lock in those future margins.
That's us.
4, hitting their targets on the planned divestments. Execution matters.
They can find.
Any further moves on credit ratings or maybe even steps towards reprivatization down the line, assuming they keep hitting their financial targets, those are the triggers to watch.
All right. Let's shift gears one last time. The not financial advice segment. Investment committee is listening. What's an interesting, maybe slightly edgy but plausible play on Uniper right now?
Okay, here's my thinking. I'm looking at a long position, yes, but using a collar strategy.
A collar. Explain that.
Right, so you buy the stock, then you sell an out-of-the-money call option above the current price, and you use the premium you receive from selling that call to buy an out-of-the-money put option below the current price.
Okay, so limited upside, limited downside. Why this structure for Uniper?
Because, as we discussed, the market reaction was flat. The normalization seems priced in, but I don't think the upside from potential wins in those German gas auctions is fully valued yet. Uniper thinks they can grab a big chunk of that.
So the call limits the gain if it only performs as expected.
Exactly. You sell that call to someone betting on modest gains or stagnation, basically monetizing the market's current apathy.
And the put.
That's your safety net. If those regulatory delays drag on even longer, or the whole energy market takes a dive unexpectedly, the put protects your downside.
And the premium from the sold call pays for the put.
Ideally, yes, or mostly pays for it. You essentially get free or very cheap downside protection while still keeping exposure to that potential upside catalyst from the auctions.
So it's measured bullishness.
Precisely. Leveraging their solid financials, their risk management focus, the shift to contracted cash flows, it provides a decent base. It's a play on, let's call it, the slow burn of their strategy actually working out and meeting real market needs.
Interesting. A structured way to play a potential catalyst.
That's the idea.
Okay, so to wrap things up, Uniper's first half of 2025 shows the company, well, successfully finding its feet in this normalizing energy world.
Yeah, those crazy high earnings from 2024 are gone, but Q2 was solid, guidance reaffirmed.
And crucially, a pragmatic refocused strategy is now laid out. Flexible gas, targeted green investments. That seems to be the path forward.
But as always, we have to say, this is not financial advice. Any trade ideas are purely for discussion illustrative purposes.
Absolutely. Do your own homework. Conduct your own thorough due diligence. Maybe talk to a professional advisor.
Definitely.
Ultimately, Uniper's story is kind of a microcosm of the whole energy transition challenge, isn't it? Pivoting from the old to the new, balancing today's needs with tomorrow's climate goals, navigating shifting regulations. It's complex.
It is. And the question for you, the listener, is whether Uniper's pragmatic path is just reactive or if it's a genuinely robust plan for long-term success. Something to think about.
Indeed. Thank you for tuning in to The Deep Dive. We'll be back soon with more essential insights.